Hey everyone, Kevin here. Welcome to IPO This Week, right in the dead middle of April. As you know, there's a lot going on, and I'm not going to try to cover every company going out this week, just not enough time. What I am going to do is I'm going to focus on two new companies coming out this week called AppLovin and TuSimple. I'll give you all the details about them and their listing. And then I also want to talk about two of those 7 companies that you guys might remember from December that we talked about coming out early in 2021. And as of right now, these are the last 2 on that list, so we did pretty good, it looks like. So to keep this video from getting too long, let's just jump into it right now, and we'll start with AppLovin. AppLovin is a company whose technology provides advanced tools for mobile app developers to grow their businesses by automating and optimizing and marketing the monetization of their apps. Since launching in 2012, AppLovin's platform has driven over 6 billion mobile app installs for mobile app developers. So what the company says is that through their technologies and scaled distribution, app developers are able to manage, optimize, and analyze their marketing investments and improve the monetization of their apps, which they feel is pretty important for those smaller indie-type developers because there's a very crowded market. In fact, according to Statista, there's more than 4.8 million mobile apps available on Apple's App Store and Google Play Store. So what AppLovin feels that they can do is they can help the app developers get their apps to more people. For some statistics from the AppLovin IPO filing, Sensor Tower estimates that 80% of all mobile app downloads were generated by 1% of total developers across both Apple App Store and Google Play Store back in the third quarter of 2019. And the area with the biggest challenges for mobile app developers is mobile games, which is one of the largest and fastest growing segments within the mobile app ecosystem. According to IDC, there are more than 2 billion mobile gamers worldwide, and according to Statista, there are more than 1.3 million mobile gaming apps available on either of the Apple or Google Play stores. Mobile gaming accounts for 39% of worldwide app downloads and for 72% of all App Store consumer spend by value, according to Sensor Tower. Now, to help their developers' apps to stand out, AppLovin claims that their technology leverages machine learning and predictive algorithms to help better match users to your app on a global scale. And as more developers use AppLovin's software to market and monetize their mobile apps, they gain further access to more users and more user engagement, which further strengthens their ability to maximize scale distribution. AppLovin estimates that a year after joining their portfolio, apps acquired in 2018 and 2019 had increased their quarterly revenue over 100% on average. Now for some financials, revenue has grown at a 76% compounded annual growth rate from 2016 to 2020. And for 2020, the revenue grew 46% year over year from 2019, as it grew from $994.1 million in 2019 up to $1.45 billion in 2020. And then as far as overall profitability, AppLovin reports that they generated a net loss of $260 million in 2018. That grew to a net income of $119 million in 2019, and then it went back to a net loss of $125.9 million in 2020. Now, a big issue from being profitable in 2019 to again losing money in 2020 was on the expense side, particularly a 130% jump in the cost of business expenses. Those expenses came in at $555.6 million, with $112 million of it due to payment processing fees charged by Apple's App Store and the Google Play Store, which ran as high as 30% of purchases. Now, we heard about some other companies last year having some pretty vocal complaints to this pricing model, which doesn't appear to be significantly changing anytime soon. For future growth, AppLovin estimates that their total market opportunity to be $189 billion in 2020, growing to $283 billion in 2024, or at a 10.6% compound annual growth rate. As for competition, they feel that they have 2 types. The first are from providers of developer tools that enable developers to reach their audiences or manage or optimize their advertising campaigns. And for those competitors, AppLovin lists Facebook, Google, Twitter, and Unity Software. Now, some of these competitors are also partners and enterprise clients, and they mention how their studios build many of their apps using the development kits offered by Unity Software. And then for the second type of competition, which are businesses that develop online and mobile games and other mobile apps, they list companies such as Activision, Blizzard, Tencent, and Zynga as their competitors. As for AppLovin's IPO, it looks to be priced on Wednesday between $75 and $85, and then trading would begin on Thursday the 15th. AppLovin stock will then trade under the ticker APP. Alright, so that's one of the first new companies. Let's jump and talk a little bit about UiPath. Now, they're not coming out public this week, but we did get some more information, and I'm going to share with you in a second when they will be coming out. As of now, UiPath looks to raise $1.1 billion, with their IPO shares being priced between $43 and $50. Now, if the shares do price at the top end of the price range, UiPath would have a market capitalization of about $25.8 billion. Now, that would be up from $10.2 billion in a funding round from July of last year, And that was actually up from $7 billion in the previous round in 2019. Now, I'm not going to get too much more into the details on UiPath just because I do plan to do a dedicated video on them. So if you don't want to miss it, hit that notification bell. But I will share a couple little financials with you. In that UiPath did have a net loss of $92 million last year on revenue of $608 million. Now I'll go a little bit deeper into the financials, again, how it compares to previous years. But for right now, I just want to give you details of the UiPath IPO. So as of right now, we expect that the trading to start on Wednesday, April 21st. And the UiPath stock should be listed under the ticker PATH. Now let's go to another company going public this week, and that's TuSimple. Now TuSimple is an autonomous technology company founded in 2015 that is focused on the $4 trillion global truck freight market, which is a large and essential industry that moves approximately 80% of the freight in the United States by revenue. According to TuSimple's filing, they state that they have developed the industry-leading autonomous technology specifically designed for semi-trucks, which has led them to build the world's first autonomous freight network in partnership with shippers, carriers, railroads, freight brokers, fleet asset owners, and truck hardware partners. TuSimple believes that their technology and their network will make long-haul trucking significantly safer, as well as more reliable, efficient, and environmentally friendly. The company claims to have developed a fully integrated software and hardware solution, enabling what they believe is the world's most advanced Level 4 driver-out autonomous semi-truck technology. So what does Level 4 mean anyways? Well, Level 4 autonomy is characterized by the ability of the vehicle to perform all driving functions under a given set of pre-specified conditions. TuSimple believes that their Level 4 autonomous capabilities are well suited for middle-mile truck freight, in which predictable and primarily highway routes make up the majority of total miles driven on a shipping route. Their technology claims to enable semi-trucks to drive day or night on both the highway and surface streets in rain and in other poor weather conditions at speeds of up to 75 miles per hour. Now, as part of the proprietary technology, they tout a 1,000 meter perception range, 35-second planning horizon, high-definition maps with accuracy within 5 centimeters, and an integrated Level 4 autonomous semi-truck design comprising of a fully redundant sensor suite and components that are necessary to be able to operate at highway speeds. And another thing about their trucks is that they can be expected to operate in excess of over 22 hours per day, as they're not subject to the same maximum daily operating hours restrictions as the human driver. Now, TuSimple believes that they are the first and only company to demonstrate these capabilities and achieve Level 4 autonomous semi-trucks driving on both highways and surface streets, and they also believe that they're the first company to autonomously haul a paid freight load. Now, they're seeing a lot of interest in their technology as they report to having over 5,700 reservations received as of March 23rd. Now, as of right now, they're looking at two types of service models. One would be a carrier-operated capacity. Now, this is where the carrier would own their shipping operations. So for this model, TuSimple would charge the fleet owners per mile subscription fees. So this is really a subscription as a service model. Now, the other model is a TuSimple capacity, which is where TuSimple would continue to own the operations. And then TuSimple would charge a freight user a rate per mile to ship the freight. Now, if you're looking at this company, you got to realize where the company's at. Because at this stage, the financials are what they are. Very little revenue with a lot of expenses. And for 2020, their net loss was almost $200 million. Now, if you're concerned this company may never make it to market, keep in mind I do have some partnerships with some big names like UPS, Navistar, a Volkswagen affiliate called Triton SC, and also US Express. Now, a lot of what they're doing is building towards 2024 when they look to have 46,000 miles of highways digitally mapped, because right now they're only at 3,000 miles. And they also look to start producing a line of purpose-built Level 4 autonomous semi-trucks for the North American market at scale by 2024 in Navistar's manufacturing facilities. As far as the TuSimple IPO, it looks to be priced between $35 and $39 on Wednesday, and then TuSimple stock would then begin trading on Thursday under the ticker TSP. Now let's get to Coinbase. Now we've talked a lot about them. In fact, just this weekend I released a dedicated video on Coinbase going over the financials, the background, some of the considerations for investing in the stock, and just wanted to give you a little bit of an update as we head into the direct listing, which is going to happen tomorrow. So I'm not going to repeat everything from that last video. If you haven't seen it, definitely check it out. But I want to go over a couple things as we start to think about where could Coinbase start to trade. Now, we talked about in that last video that the volume-weighted average price per share for the first quarter of 2021 came in at $343.58. So again, those were shares that were sold on the private market. Now, assuming that those shares were sold on just using the data from 2020 revenue, which we know came at $1.3 billion, And yet now we have some financials for quarter one of 2021, which we saw that the revenue came in at $1.8 billion, which is, again, more than all of 2020 combined. So now you have to wonder where these shares are going to trade now. All right, I'm going to say something crazy here, but so don't stop here because I want to preface this by saying that there's some caveats here. But by using some valuation measures, just considering what the stock was traded in 2020, based on what the information that they had then as private investors, on some of the revenue numbers, looking at where they're at now in quarter one, using some valuation measures I was looking at, I mean, in some ways you could justify the shares being worth $1,500 up to a little over $2,000. Now let's talk about why that's probably not going to happen. And in fact, I'll give you an idea of where the stock could open up based on some other information that's beyond just me trying to work at numbers out. But the biggest reason is, again, you can look at what the revenue was, but there are some considerations that are going to impact the company. Number one is that Coinbase makes most of their money from transaction fees, which we talked about in the last video. And there is an expectation that there could be some decreased volatility. So you just think about it. Right now, we see Bitcoin, getting to record highs. We see Ethereum, record highs. But the thing is, we've also seen some of those have some big bounces. And when there's volatilities, big pricing changes, that's where you tend to see more trading. And when it's more level, you don't see as much trading because people feel like they're basically breaking even at this point. So they're going to hold, hope for more value, or if they're concerned that they're going to lose a lot of money, they're going to sell. But if things are pretty steady, you don't have as much trading. So that would hurt Coinbase. So I would expect that Coinbase themselves won't expect that revenue to maintain at $1.8 billion per quarter. The other thing that really comes to my mind is that there's going to be more competition. And I mentioned this in that video, but just wanted to give you a little idea on this. So with more competition, then that's going to put pressure on Coinbase's transaction fees. And the concern, I would be, if I'm Coinbase, is if you have somebody like what Robinhood did to stocks. So as you guys know, we used to have a lot of commissions when it came to trading stocks. Well, with Robinhood, they started the whole, commission-free trading. And if there's a race to the bottom in transaction fees to potentially zero, and we know that Robinhood is considered to be one of the competitors that Coinbase listed, if we start getting into that, then all of a sudden Coinbase revenue goes way down. Now that doesn't mean that they're going to lose money. It's that's a bad company and whatever, but it is a concern that if you expect this revenue is going to continue at this rate or even go higher, it's probably unlikely. And I kept saying in that last video, your timing is everything. So Coinbase is coming out right at the right time for themselves. So while I could say, you look at these models and think, boy, based on what revenue was in 2020 and what private share or private investors were paying for those private shares earlier in the year, this is why you could justify this $1,500 plus per share. But again, because of those things, and I think that they're likely to see, again, both decreased volatility, which will lead to less trading, and more competition, which can drive transaction fees down, I don't think that revenue could hold. And even if it does, it's probably going to hold in the short term. Long term, it's definitely going to happen. I just can't see it not happening. So anyways, that's some of my ramblings of my own thoughts. But let me share you some information that I saw this morning. So CBSC, which is a pre-IPO Coinbase contract, and it's listed on the crypto exchange FTX. This contract was trading in the upper $500 to the lower $600 as of early this afternoon. So if you're looking at that, you're expecting that the stock could open in that low $600 range. And that would actually imply a valuation of over $140 billion. And we've heard a lot about $90 billion, $100 billion valuation at the direct listings. So again, that valuation would be higher than anybody expected. Now you can look on to some other people talking, they think the company should be valued as low as $19 billion. So there's a lot of discussion of where the company should be valued. But again, just trying to expect where the stock could open, very likely could be in that upper $500 range to the lower $600 range. Now as of this recording, I still don't have a reference price, which I've talked about direct listings and what reference prices are, and again, why that doesn't mean that's where the stock will actually trade. Still haven't heard what the reference price will be. I'd still expect it to be around that $343 mark because again, that was the volume weighted average. And I say that because as what we see with other direct listings, that's what those companies have done, is that they look at recent trading on their private shares and basically put that number out. And so while the stock will probably trade higher than that $343, in fact, again, just based on but I'm just telling you, it's most likely we'll probably trade at least a couple $100 more than that. They still will likely use that $343 reference price because, again, they have reason to use it, and because it'll also make the company look really impressive as far as their debut, which, again, for whatever that's mean. And as I said before, reference prices don't mean a whole lot when it comes to where the stock will open. We've talked about direct listings as well, so I had a video on that, so if you haven't seen that, I'll also link that for you in the description. Anyways, that's some updated information as we get closer to Coinbase going public, and again, just wanted to share that with you guys. All right, so that's what I got for you for IPO this week. I hope you liked the video, and if you did, please push that like button. Really important to the channel, and it just lets me know that you enjoy videos like this. And then if you're new here and you've never been to the channel, or you've been here but you've never been really interested to subscribe, hope you subscribe, because that way you make sure you won't miss any of the upcoming videos when we talk about things like this. So with that, I hope you have a good week of trading, and I look forward to talking to you guys soon. Take care.